The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets.
Well, hello everyone. I'm Kenneth Amaduri, and we got a special guest today. His name's Polny. He's with gold2020forecast.com. And he's got some really bold predictions. And Bo, I commend you for that, because that's really difficult to be able to do. So it's really relevant, because I want to talk about the stock market and gold, but it's very relevant now because a lot of these predictions are coming to a head within the next week, month. Very interesting times, so it's very relevant for the people listening to get educated on these things. So thanks so much for taking the time to come on the show with me today.
Ken, I'm grateful for you guys reaching out to me, and I'm grateful to be here. So thank you so much.
Bo, what are your current thoughts on the stock market? I want to start off there. And how have you been able to come to some of these conclusions? You drew some lines for us, and I've watched some of your videos, and I think it's really fascinating, some of the connections you've made and why you are anticipating a major stock market crash.
To start off, I would just suggest we have a YouTube channel I just made recently, but we're posting the videos to our web page. But there's a YouTube channel, is Gold 2020 Forecast. There are two videos posted there. The first video we did last week, and the second video we posted last night. But bottom line is, on both of the videos, what we're forecasting is a really ugly finish to the year for the stock market. I did an interview specifically with Rick Wiles on the 20th. I scheduled that date for the 20th specifically because we have a stock cycle that we have been following, and this is crazy, but the cycle has been playing out so well that we've called 30 turns so far since last November. All 30 turns have occurred. And the final finale turn was coming in right around the 17th of July, and so we scheduled an interview with Rick on the 20th, because the 17th was a Friday. So we scheduled the interview for the first day, and that was expected to be the first day down for the U.S. stock market. Well, I don't know if you've noticed what happened since. I'm sure you have, but on the 20th, the Dow dropped over 180 points, and then in the interview, we were specifically looking, because of the turn being a completionary turn, we were supposed to see a stock crash into the end of August. And this is crazy enough, but the Dow dropped 2,700 points. We had a date of September 2nd for a completionary time point. And by that time point, the Dow had bounced and then made a higher low, but it went down to about 2,100 or 2,200 points off of the July high. So the fact that occurred the way it did, it created it continued the chart, and so what it leads is to work. The charts get worse. This was just the start, and this was a precursor or a prelude to what is about to come into the end of this year and into the year 2016.
So, Bo, what exactly are you seeing in the charts? Why is 2015, fall 2015 so significant, and how are you coming to the conclusion exactly?
On top of looking at the cycle work, I overlay Bible prophecy onto the work just to see how it lines up. And it gets crazier, and I've outlined this in the videos, and again, please, they're not long, but they're very, very detailed videos. The information I give there is just the details are too uncanny, and I call them coincidences. But the point is that for the stock market, because we dropped in the month of August, September is an up month. And I know the whole world is screaming about the word Shemitah, Jonathan Cahn. And I got to admit, what Jonathan Cahn has said and what has been prophesized, is completely accurate. But the point is, this cycle, this time around, there are two overlaying long-term cycles, okay, one longer than the other. The first one goes back to the year 1764. If you go to that year and you add 21 years, this is unbelievable, but you get stock market recession and depression cycles every 21 years from 1764. The next cycle end will come in the year 2016. So that will be a cycle low that started in the year 1764 with the Currency Act. So that's the first cycle. Then the second cycle is a week cycle, which is 2,520 weeks. That cycle actually, you can go back thousands of years with that, and that was, originally with what's called the writing on the wall, and people have heard that saying. But that cycle, secondly, it began in 1967 with the Six-Day War, and then that cycle completes this September. And it happens after Elul 29, which would be the time of the Shemitah, but it happens near the end of September, the 23rd of September. And from that point forward, we're going to start seeing calamities begin to unfold within the equity markets. And so that's really, there are two overlaying cycles that are coming to a head and to completion. One completes this September, and the other one's going to complete with a cycle low in the year 2016, next year.
So, Bo, what exactly in terms of the fundamentals is connecting to that? Obviously, there's a lot of things that we can point to, but what do you see as the catalyst aside from the cycle? Because that is incredible that every 21 years that we have this cycle and these other cycles that you've been able to point towards. But what is connecting the dots to mainstream, to what is going on in the world and with governments and big banks and the word's slipping my mind, central banks, all these different entities, and what the stock market and buying and selling and high frequency, all these different things that we can talk about connecting to these cycles. What do you see as the catalyst, or is it the cycle itself that is the catalyst?
No, the cycle needs the life to occur. And so the catalyst is going to be very simple. It's a loss in faith and confidence in credit. And credit is money. Okay, so you have money, which is nothing more than faith and confidence. And then when the charts break, which I illustrate in the videos, try to make this very simple, so there's some very intelligent people out there, financial analysts who don't need the simplicity that I did, and then there's other people who actually need it. But the point is, the videos were done to illustrate how charts tell you what's going to happen. And so, for example, the U.S. stock market, okay, is in a ascending bearish wedge. Okay, what that means is for the past 7-8 years, it's been going up, but in a wedge. So it's like taking two lines, they come together. Right before they come together, they either break upwards or break downwards. And so the U.S. stock market at the end of August broke the wedge. But not only did U.S. do it, you got Hong Kong broke the wedge, China. You had Canada broke the wedge. You had London break the wedge. You had the U.S. markets, all across the board, the world markets broke the ascending wedge. And now, once your break forms, you get a pause, which we're sitting at right here, right now, and then you get collapse, okay? And that collapse doesn't happen tomorrow. These are weekly and monthly charts. So off the break, you get a pause, and then you get a collapse. The U.S. dollar is following the same exact cycle that the stock markets are following. In the end of August, when the stock markets collapsed, what did the dollar do? It too collapsed. And so that collapse broke the ascending wedge, and now the wedge is broken. We get a pause, and this is on a weekly chart, and then you get collapse in the dollar. So the point is that the charts are telling us what will be coming. Now we need the events to follow through. But then a better question I can ask is, when we go to the April of 29th, I posted an article in Silver Doctors, and I basically said, today, or right in here, this time point, the Hong Kong is supposed to top. And it did exactly on that date, and it fell for 5 days consecutive. And then since then, the Hong Kong markets, or the HSI index, is down over 7,000 points. So what made Hong Kong top on that date would be a better question. I don't know, but the charts said it was going to happen. And then taking that cycle chart forward for Hong Kong, it points to this September 23rd, which again lines up with a 2,520 week cycle going back to 1967. That cycle is lining up with the Hong Kong cycle, which we had to forecast the top. So now we've got a cycle drop expected on Hong Kong on about the 22nd and 23rd of September of this month. Okay, so my question, or again, my answer to your question would be, what will be the catalyst? I believe it will be Hong Kong. I believe a Hong Kong crash is going to trigger the events that are going to lead forward. I think Hong Kong is going to, when it drops, or whether it happens on that date or a week later or several weeks later, it doesn't matter. The cycle's down. Okay, but if Hong Kong drops, then there will be what's called a flight to safety. Okay, well, in 2008, the flight to safety was the US dollar. I posted, in part 2 of the video that I posted, I showed the wedge, and I compared 2008, and I compared that to 2015. And you will notice that in 01 to 08, 2001 2008, the dollar was in a descending bullish wedge formation, and thus we had the rise and the move upwards for the US dollar. Now, the current 2015 cycle is the dollar is in a ascending bearish formation with a break at the end of August, which is now paused and soon to collapse. So, if Hong Kong and when Hong Kong crashes, it's not going to run to the US dollar as a safe haven as it did in 08 or the other markets did across the world. I believe they're going to run to precious metals. When they run to precious metals, that is going to be the trigger and the catalyst of everything that's about to unfold here into the end of 2015.
When I watched your videos talking about the ascending bearish wedge, I mean, those were powerful illustrations, and it's amazing how the different markets across the world are experiencing that. And you make a very compelling point as to what will crash and be the catalyst for this. Now, what you're talking about is hyperinflation. Now, there's people out there predicting deflation, just as you pointed out, that 2008, we saw a flight to dollars. And what you're talking about also is a market crash. And when stocks go down, that's deflationary in the sense that, more dollars will buy you more stocks. However, what is your view long term on that? If we do see a hyperinflation environment, do you see stocks rebounding? Maybe not necessarily where people will get their money back in terms of purchasing power, but in hyperinflation or inflation type scenario, do you see stocks going up over the long term? Where do you see that over the next few years?
Well, see, what we're accustomed to is don't worry, it's all going to be fine. I'm sure we've all heard that saying, just stick in there, the markets will keep going up. And so, you can use that as illustrations from, since 1764, the markets kept going up and going up. We've had 251 years of that. This is the 251st year. It ends. Upon this completion, this is the completion of a 250-year cycle, 252-year cycle with a cycle low in the year 2016, which will be the 252nd year. So my answer to your question is, this is going to be the crash of a century. Okay, this is going to be worse than 1929. We've had 3 attempts. We've had 2001, it broke, it hit a bottom. You know, we can look at London, for example. I got the chart here right up in front of me. So we look at London. London ran up into the year 2000. It cracked. The wedge broke. Once a wedge broke, it went under the support line. It paused, and then it collapsed into the year 2000 and 2003. And the cycle low came in around 3,600 on the FTSE. Then it rose back up for another roughly 7 years. It broke again in 2007, 2008, so the wedge broke, and then you had to collapse back down to 3,600 again, okay? And now, from 2009, it ran back all the way back up into 2015. And then on our interview on July 20th, we basically said, this is it. And the amount that data dropped, and so now the FTSE is down. I think it was 2,000 points or 1,500 points off of 7,000. More importantly, the wedge is broken on a monthly chart. Okay, these monthly charts are extremely powerful. Now, once you have a break, you got to pause, and then you got to collapse. Okay, so your minimum target for the FTSE right now into next year is another retest of 3,600, which is going to be roughly a 60-70% crash. That will be across not only London, but across the other markets. And with that, you're going to see the real estate collapse. You're going to see everything go down. The problem is, this is your 3rd time around. On this 3rd attempt, on London, for example, and I challenge anybody to go say that this is not occurring. Run a monthly chart from the year 1996 to 2015, and you have a triple top on the FTSE, okay? The triple top, if it doesn't take it out and go vertical, it breaks down, which it did now. The end result not only is a drop back down to retest the lows in the 3,600, you're going to get a collapse and a break of that, and that's going to take the FTSE down to probably between 1 and 2,000 points. So my long-term projection is this is the meltdown, and the meltdown is going to last at least 7 years into possibly the year 2020 into the year 2022 on probably a 90% correction or drop off of the July 2015 top, which we called. So it's a massive, massive correction that doesn't end. People will try to buy, and each time they buy, they're going to get hit, and it's going to keep failing. Each rally will fail. They're going to try to, you're going to see the markets bounce probably in 2016 off the expected low, but then ultimately that low will break again.
Yeah, I mean, that's what I was going to kind of ask you, is that you're talking about this 250-year cycle that it is going to end, and I was just going to follow up with a question just asking you, what exactly will that look like? And what does end mean? And so what you're saying is small rallies that don't amount to anything?
Right, that's what you're going to see. You're going to see rallies. You're going to see. It's going to be like schizophrenia. Right now you've got schizophrenia of the markets. We basically said the market is going to drop into the end of August and then bounce. And then yesterday the Dow went up like 400 plus points, and then today it's kind of flat or a little down. But it's going to be schizophrenic. It's going to drop hard. So before the end of 2015, okay, we are looking for between a 30 to 50% drop on the equity markets, okay, and then you'll get a bounce again, and then you're going to get a drop again. So you'll a 2015 drop, but then a bounce, but it will fail, and then you're going to get a drop into 2016.
Yeah, I know. I totally see the scenario playing out, and like you already said it, the writing is on the wall. So moving over to precious metals, you made some predictions: gold 9,000 and silver 1,000. Can you talk about this and tell us how we might see these numbers fulfilled?
Well, the way you do silver is you go off of gold and you run a ratio. So let's talk about gold. So gold itself is so we basically, as of July, we're expecting that to be a low. for July. Gold has been an extreme, and silver have been nothing but frustrating for all of the world. We've been looking at cycles, and that's been a very difficult cycle to nail up until now. And boy, now the cycle that we're following, it's so incredible. It's really exciting. But the gold cycle, we still see a little bit of there's no fun for precious metals. I mean, nothing exciting yet. And the reason being is because we need to go back to mathematical calculations, okay? The 2,520 week cycle does not end until September 23rd, okay? So until that time point, until after, say, the 23rd, 24th, we're not going to see metals do anything exciting, okay? But that was the day biblically would have been, was called the writing on the wall. And so, at that time point is really coincides with your kingdom has been put to an end. You've been weighed, measured, balanced, and found out of balance. And your kingdom has been now divided. That's the time point that we're getting to. And I know it's kind of like, it's hard for people to fathom, and it's irrelevant. It doesn't matter. But the point is that will delineate a point in time. And from that time point, expect the precious metals to start to make moves. Okay? It will start slowly, and they'll begin to make moves. And then what will happen to the precious metals? Please go to part 1 and part 2 of my video. The gold cycle is in a 5-year descending bullish wedge formation. Okay? When the wedge breaks, you're going to get explosive movement vertically, okay? And so, but that won't happen until after, we've got the completion of the cycle, which we're looking at, end of September into early October. So that's when the precious metals are going to get to be exciting. And then so the price targets, so now we've got a long-term cycle for the dollar down. And again, the reason the dollar is going to go down is because the weekly cycle that we posted is the dollar is in an ascending bearish wedge formation. That means that once the wedge is broken, it'll pause and then drop. So as the dollar drops, precious metals start to go vertical. So then gold price and the US dollar will start to accelerate vertically, and you're going to see moves to the upside. We have a cycle for the U.S. dollar, which is supposed to bottom in basically a significant low or a bottom coming in the year 2018. So expect the metals to have an amazing, few years forward, and then more importantly a pause, and then even another leg. So numbers like under 10,000 on gold, there's stages. First, you're going to get over 2,000. Then you're going to go to 5,000. And once you take out 5,000, 10,000 becomes a no-brainer, or it becomes something quite plausible, or just under that. And then when you run, so you're looking at and that will continue, because as the markets are collapsing into the year 2020, 2022, the world is fleeing to gold and to silver. And so you're going to see legs up like that on gold. And then you run a ratio. And so, in-ground ratio gold to silver is 10-1 in war times. So if gold is at 10,000, that would put silver in the 1,000 range to under that. So between 600, 700, 800 to 1,000 range. So silver is going to be priced based on the price of gold.
Bo, if you have any last words of advice for people, what exactly are you advising people to do? And one thing I maybe you can include this as well is if you look at where silver is now compared to where gold is and your price targets, it looks like there's a lot more upside in silver. So just some closing thoughts, and maybe you can touch on that as well.
Sure. Yeah. In terms of choices, you've got gold. For every ounce of gold, you can right now buy 70 to maybe 80 or 75 ounces of silver. Aside from the crazy premiums you're going to have to pay right now, but again, those premiums are nothing in terms of what will probably come in the near future. So closing thoughts is everything paper, from what I'm seeing is from the stock markets to the dollar and currency in general. There is going to go down, and the flight to safety and I believe it's going to be triggered by Hong Kong or China, is going to be to gold and to silver. So it's a matter of positioning yourself. Whether people want to believe or not, it's coming. The wedges are broken, period. I've illustrated on the video. Go look at it yourself. The wedge are clearly broken across all world markets and the dollar. That is going to end up causing a pause, which we're now at, and then a crash. So believe it or not, it will come. Following that, and then as that's occurring, you're going to get a flight to safety, which is precious metals. And so the trade, and the position to be would be precious metals. And if people are looking, or investors are looking to time this, I've given all the information, an amazing amount of information that I believe in the videos. But if they're looking to time it, then that's, we offer those in terms of, we have certain dates into the future. But the point is that paper and currency is going to be a very big issue. And I believe precious metals, and from what the charts are telling us, and from what cycles are telling us, it's going to be exciting times for the precious metal sector in the years ahead.
Bo, if people want to reach out to you and find more information on you, can you just tell everyone where they would go and what they're likely to find over at gold2020forecast.com? My webpage, I've got a couple of the videos, or the second one should be posted here shortly. I do, whether people do anything or not, the most importantly, I just, it's critical at this point in time to do something. You need to protect yourself financially, and I believe spiritually as well. But those are two critical things that must be done at this point in time. Because if you do nothing, this is not going to turn out good. If you're protected and you're positioned yourself, I think that will be the number one thing to look at. And then on my webpage, there's three things we offer. One, if you're looking at specific more accuracy and want to get daily services on gold, we offer that. It's our turn date service. But most people, what they need, if they're looking for anything, you want to watch the markets, we have a stock index and we have specific time points. And there's a dates and time in the future that we expect highs, or specifically in the stock market, we're expecting lows. And there's one final point to get out of the market and one point yet to short it, to go short on the markets before the collapse occurs. So that will be in the stock index. And then on the gold index, we're expecting a high still this year in 2015. We're expecting a pullback, and then we are expecting a secondary significant high in the year 2016. Again, price is much less important when you do cycle work, but cycles give us the date, the timing points. And so the direction into the year 2016 and then into year 2018 is up, and then even beyond that still is up for the precious metals. And the direction into the future for the stock market is a meltdown low into the year 2020, 2022. Wow, Bo, that's incredible. You make some really compelling arguments, and I think you've made some of the boldest predictions that I've heard in a very long time. And part of me hopes you're wrong, but quite frankly, the evidence is stacked with you that it's time to prepare. So everyone, check him out at gold2020forecast.com. Thanks so much for taking the time with me.
Ken, I really appreciate being here, and thank you for the opportunity to talk to everybody and all of your listeners. Thank you so much.